In this video, we'll be covering the basics of Bitcoin and crypto, what it is, how it works, why it's important, and how to get some. If you're new here, welcome to the Anyas Crypto, where we empower women to learn, grow, and thrive in Web3. I'm incredibly passionate about Bitcoin and crypto and all these new opportunities. And over the years, I told all my best friends about it, but now I want to reach out to more women because there's a lot of guys in crypto and I meet women that are interested. They just don't know where to start or really what it is and how to get some. So if that sounds like you, this video is for you. This is a beginner's guide to Bitcoin and crypto and how to get some. Yes, some of these things can be complicated, but don't worry, you don't have to be a genius to succeed. You just have to understand a few basic concepts and you can win too.
Just a quick disclaimer, this is not financial advice. It's for educational purpose only. You're responsible for your own financial decisions.
So a good place to start is to talk about Web3. So Web3 is a broader term for anything that has to do with crypto, blockchain, and these decentralized applications that are coming out. Why are we calling it Web3? Well, we have Web 1 and we have Web 2. So of course, this is evolution of that with Web 3. And Web 1 is, go back to the 90s where everything was very passive. You had a website, you could read the news or the weather, but that was about it. Of course, you had email as well, but you really had to be more of a programmer to do anything more interactive than that. And then in the 2000s and 2010s, we started to get more interactive with these apps where you can log into. You're not only reading, but you're creating content, you're writing things as well. And Web3 is an evolution of that, where, you're not only reading and writing, but you can also own the content and you can own the data. So Web3 is the evolution of the internet because we're moving away from only read and write to read, write, and own. And this technology enables the ownership of digital assets and your data. The users are in control. It's more user-centric. So it really gives a lot of power to the creators, and new business models are emerging because you're connected with your buyers directly. So one of the key concepts to understand is decentralization, and that Web3 is all built in a decentralized way. So if you compare that to a centralized network, let's take Instagram, our favorite social media to love, hate on. But basically, if you pretend that you're one of these little dots here, you log into Meta's server, you create some content and you post it. And then it's up to Meta to, post it and send it out via their algorithms to all of the users. Well, if you compare that to a decentralized network, let's say you're one of these dots here, you log in with your wallet because that's how you interact on a blockchain. You do a post or you do a transaction, and then it gets distributed to everyone in the network. So it's more like a mycelium network, you could say, and everyone gets updated. So it's not controlled by a single entity, but everyone on the network has equal amount of power, you could say. And, if this isn't someone else, they make a transaction or they make a post, it then also gets distributed to everyone here on the network. So that's one of the main differences. All right, so the technology behind Web3 is blockchain, and blockchain is a new type of distributed computer. So it really is what it sounds like. It's a chain of blocks that are connected and secured by cryptography. And it really is a new type of decentralized database that can also execute code. So we'll get into more of that. So if we go back to our illustration here, you can think of one of these circle as a computer, as a node. It's just a different name for a computer. So each of these nodes has a copy of the entire blockchain on it. So if one of them goes offline or breaks down, it doesn't matter because there's so many other that has the entire blockchain on it. And I also want to add, if you're one of these computers that help to uphold the network, you also get paid every time you post the next block on the chain. And in Bitcoin, it's called mining. So if you're one of these miners and you add the next block to the chain, you also make Bitcoin. So of course, there's a lot of people that want to be part of these blockchains because you make money by doing so. So, of course, this is where the cryptocurrency comes in. So the entire point and the business models of a blockchain is to sell block space. Every time you make a transaction, you buy or sell an NFT, it takes a small fee. So it's not free to use a blockchain. And that fee goes to the miner or the staker that adds the next block that your transaction is in to the chain. So of course, crypto is only in digital forms. There's no actual like physical coins, but it's all on the blockchain and it's native to the blockchain they're on. So Bitcoin is on the Bitcoin blockchain, ETH is on the Ethereum blockchain, Solana is on Solana blockchain. And there's tons of these different blockchain, of course, and they all facilitate the transactions. They also control the creation of the new coins. And they basically keep track of who owns what. And we're going to start with talking about Bitcoin because that is the first and most important blockchain and crypto. Okay, let's talk about Bitcoin, the best performing asset of the past decade. We're going to get into why some of this is important. Bitcoin is the first and most successful crypto out of all of them. And it's sometimes referred to as BTC. It's the ticker symbol, so if you're buying it, you should be looking for BTC. But it basically has this game theory built into it. So it has a limited supply of 21 million Bitcoins, and it has these 4-year cycles. And that's linked to the issuance model of new Bitcoin getting cut in half every 4 years. So, of course, that's also pre-programmed into Bitcoin. So it's becoming more scarce. So it's a deflationary asset. Not only that, but it's censorship resistant because of its decentralized quality. So there's no single authority in charge of the network. Like there's no one that can freeze your coins. As long as you have an internet connection and a wallet, you can make a transaction. So we don't actually know who Satoshi Nakamoto was or is, but it is commonly understood to be this group of programmers that invented Bitcoin because of a reaction of the 2008 financial crisis, where a lot of people lost all of their savings, went bankrupt, and of course the banks got bailed out. So they wanted to come up with a better system. So all of these qualities combined make it really appealing for people. And it's also commonly referred to as digital gold because it shares some of the traits of gold, but of course in digital form. And not everybody can afford a house or some precious art that's supposed to appreciate over time. But you can buy 0.01 Bitcoin, which of course makes it more accessible. All right, let's compare Bitcoin to dollars and euros and other fiat currency. So what is money? Well, money is a medium of exchange, a unit of account, and a store of value. But is the dollar a store of value? Well, I would argue it's not. Of course, it used to be linked to gold. We used to be on a gold standard, meaning you could go into the bank and in exchange for your dollars and euros, well, not euros, but, pounds, you could go in and get gold. While in 1971, Nixon, the sitting president, took the dollar off the gold standard. And now it's just backed by the faith in the government. And, it's backed by some debt. And yeah, just that people have faith in the dollar. And you might think that I'm making this up, but that is the actual case. So also the Federal Reserve can just print more of it. Of course, they call it something else. They call it quantitative easing, but in fact, that's what it is. So when the Federal Reserve prints more money, it increases the money supply and it causes inflation. So that, of course, makes the price of goods and services go up. You basically need more euros or dollars to buy your favorite shampoo. But that is a form of taxation or even theft because the purchasing power of the same dollar in your bank has gone down in value. So that's why Bitcoin fixes this. So if we compare these two graphs of purchasing power between the US dollar and Bitcoin, well, you can see a big difference. And Bitcoin is really increased in purchasing power over time. And it's because it has this deflationary model and being a hard money or a sound money system. All right, let's get into it. Let's talk about the market cycles. So these cycles are around 4 years and they have to do with the halvening. So the halvening is an event that happens every 4 years. So the supply of new Bitcoins get cut in half. So this is kind of a normal dynamic of supply and demand. So of course, if the demand is more than the supply, the price of whatever it is goes up. And this is also true for Bitcoin. So it takes about a year or so for the market to realize or react to the supply shrinking. And that's kind of when the price starts to go up. All right, so let's say we're comparing this to Uber. Of course, it's a little bit silly, but you get it, right? When everybody wants an Uber ride, the price goes up. And when nobody wants it, of course, it's super cheap. So it's the same with Bitcoin. So when people start to think that, okay, actually the block space is very valuable. I want to be able to do this, censorship resistant, self-sovereign transaction. Oh, wait, the supply is shrinking and the demand for it is staying the same, or it even goes up, because when things get hyped, it kind of takes on a life of its own, right? And this is how the cycles continue. So because of the supply and the demand and that dynamic. And also you have to remember, in the background, this is also happening. So, yes, it's game theory, but it also depends a bit on how much the Federal Reserve is printing, how much QE we're going through or not. So, it's definitely varies. And most likely you're viewing this video in a hype cycle, because that's when, people are excited about it. You're, seeing articles and people are talking about it. So that's why I say it's also very important to see this as a long-term investment. Like, don't go in and expect to make tons of money. This is something that you want to hold for minimum 4 years. And I can't say that enough. This is something that you're holding for 4 or 8 years. So let's say you're coming in here on one of these peaks. Well, if you can't hold it for 4 years, you're most likely going to sell it at a loss, at a discount. And of course, you don't want to do that. So even if you're buying it at one of these peaks, and if you're holding it for 4 or 8 years and you're selling it at a peak or at a bottom, you've still made a substantial amount of money. Of course, I want to insert my disclaimer here and say, am I sure that this is going to happen? Can I promise 100%? Of course, I don't. There's many different variables to this. But if things keep going like they have the last 15 years, which it's probable, then I think Bitcoin is a better bet than keeping your money just in dollars. All right, so something fun to keep track of is previous bull and bear markets and how long they are. So if we look at the previous ones, they're anything from 365 days to 546 days. So it's kind of likely that the next bull and bear market will be similar. And also the next halving is in 2028, in April 2028. So most likely a year from that is going to be the next bull market. So fun fact to keep track of. Where are we when it comes to adoption? Well, we've come a long way. Around 7% of the world's population holds some sort of crypto. And we also had a big stamp of approval from the SEC in 2024 when they approved the first Bitcoin ETF. BlackRock's iShare held record inflows when it launched. So that's not nothing. Of course, there's also countries that are adopting Bitcoin, like El Salvador and Central African Republic and Abu Dhabi. And of course, the biggest news out of all of them is the fact that the US are now establishing a Bitcoin strategic reserve and also digital asset stockpile. And at the time of recording, I don't know what's going to be in that stockpile. Of course, Trump tweeted that he likes Ethereum, Solana, XRP, and Cardano. And yeah, keep an eye on those, I guess. And whether you like Trump or not, the fact that the US are moving into this crypto-friendly environment is going to have a significant impact on the whole industry, of course. But having said that, you can tell how even the US government is making a distinction between Bitcoin and all the other cryptos. And that's good to keep in the back of your mind, because Bitcoin is the most important invention of our time. even more than AI, in my opinion. If you can compare it to anything, it would be comparing it to the wheel. If Bitcoin is the wheel, then all the other cryptos, they're like different models of a car or even like a horse and carriage. They still use the wheel. It all ties back to Bitcoin. When Bitcoin goes up, all the other cryptos and the whole industry goes up. When Bitcoin goes down, the whole industry and all the other cryptos go down as well. So if you're just going to have one crypto, it should be Bitcoin, in my opinion. Next up, I'm going to cover two major blockchains and what people actually use them for. So that's Ethereum and Solana. So why have I chosen these two? Well, there's really three reasons for it. They are some of the biggest market cap, so meaning they have the most value locked into it. They also have the most amount of transactions and the highest amount of dApps built on them. That's decentralized applications. There are many or like thousands of blockchains and they go through, hype cycles, but what are people actually going to use in a few years? And I think Ethereum and Solana has high potential for that. Also, when I go to conferences, I mainly meet people that are either building on Ethereum or Solana. So all of these facts combined make sense to me. Let's talk about Ethereum. Ethereum is the second largest crypto by market value. And if you compare it to Bitcoin, which is this kind of alternative money system, Ethereum is more like a world computer. And you can think of it as being like a decentralized app store, but a network. So, programmers, they can build their decentralized applications on top of it, their dApps, and just deploy them if they want. They don't have to ask anyone for permission. And they don't have to share 30% with the App Store too. So there's a lot of freedom that comes with Ethereum. And people can do this because it has a more intricate programming language, which is called Solidity. Solidity enables smart contracts. So smart contracts are pretty much what it sounds like. These are contracts that are smart. They can execute themselves. So if something happens, like if a certain value gets hit, something else can happen. So let's say you have a decentralized Uber and, it gets data from, the weather app that it's going to rain in a certain area. And it sends all the drivers or some of the drivers over there because obviously people are going to use more of the services. So we actually know who the co-founder and the inventors of Ethereum are. The main guy, the main character is Vitalik Buterin. And he doesn't actually have any authority over the network, but people do listen to, of course, what he has to say. And, he also holds a lot of the tokens. Also, something to note is that Ethereum doesn't have the same max supply, such as Bitcoin, which has the 21 million. It does have some kind of deflationary mechanics built into it. So every time you use the network, you make a transaction, it burns it deletes a bit of ETH. So ETH is the currency that's on Ethereum. So if enough people use the network, it becomes deflationary. But like I said, not as straightforward. So Vitalik has this quote that really explains the power of blockchains. And he says that instead of putting the taxi driver out of a job, blockchain puts Uber out of the job and lets the taxi driver work with the customers directly. Because everything is automated, you don't really need Uber to be a middleman. You can just transact and get the data directly from the network and the users. All right, so what do people actually do on blockchains except launch decentralized applications, which a lot of times have a token associated to it? So people use it for speculating and trading. And a big part of that is DeFi. So you can borrow, lend, and trade without a bank. And of course, that brings a lot of opportunities because you don't have to, go into a bank and, oops, it's 3:00. Sorry, you can't do this or that. No, of course, this is 24-hour, 7 days a week. And as long as you have an internet connection and a wallet, you can do lots of new cool things with it because you have to remember a lot of these dApps basically talk to each other. So let's say you're borrowing some token on this dApp, you can actually bring it into another dApp and, stake it, lock it up, and earn fees on it over here. So all of this is interoperable. And that's why a lot of times we say that DeFi is like money Legos because you can build on top of each other. Another big part of it is like a settlement layer for stablecoins. So stablecoins are cryptos that don't fluctuate. So they're pegged to the dollar or the euro. And it's just like a settlement layer for sending each other money that's instant, fast, and cheap. You don't have to wait a few days to send money to another country. Boom, it's done. And there's also other type of speculation, such as real world assets and margin trading. And, that's where it gets into more of this casino vibe. But yeah, basically, it's all done on blockchains. Another big part of it is, of course, the social aspect. And we'll get into that next. Crypto also has this really nice social aspect to it. And that's where the Web3 comes in. So, it's all of these communities that are rallying around an NFT project, a Web3 game, or a decentralized social media platform. And basically, it happens because you actually have stake in the project. So whether that's through the NFT or holding a token, you actually have real ownership there. And yeah, it just brings people together. And you can think of an NFT just as a new file format. So it's not just a picture, there's some code in there. So meaning if you hold an NFT and you go into a game, your avatar might look like that, or you might have some special access to a part of the game, which you wouldn't have if you don't hold that special NFT. There's also a big overlap with AI and blockchain in many different ways. But of course, an AI agent can't have a bank account, but it can have a crypto wallet. So not only can AI do some kind of programming, but it could also do trading for you. So yeah, we're seeing a lot more of that lately. There's also decentralized AI. So these are platforms that maybe launch a token to fund their project. And a lot of the AI platforms are very centralized. So this is a way to kind of, making it more open. You can have a bit of staking it. Maybe you get some kind of voting right by holding the token, or just access to the platform. So all of this is just emerging. So we're going to see where it goes. It's very exciting to see, all of this develop right now. So a lot of these projects, they choose to build on Solana, and they do that because it's a lot faster than some of the other blockchains. So if you compare, to Visa, which can handle 65,000 transactions per second, theoretically, if you compare that to Ethereum, which is like 30 transactions per second, or Bitcoin, which only does 7 transactions per second, Solana is kind of the only one that can compete with a Visa. Ethereum and Bitcoin are trying to solve this with layer 2 solutions, so meaning like network that build on top of it to make it faster and scale it. And Ethereum has done this pretty successfully up until now. But people that use Bitcoin, I guess most of them just don't care that it takes about 10 minutes sometimes for a transaction, because you don't transact that often on Bitcoin. So, it's not used really for any kind of DeFi. So most Bitcoiners don't care about that. But people on Ethereum, they do. So they do a lot of trading on layer 2 solutions. All right, so Solana is solving this by having a monolithic architecture, which means that everything is built on one layer. This is also part of some of the criticism against Solana because the hardware is more expensive, which means there's fewer nodes, which means that it's slightly less decentralized if you compare it to Ethereum, and a lot less decentralized than, let's say, Bitcoin, which is the most decentralized of all the networks. It also has a slightly inflationary model, so it doesn't have this 21 million hard cap, but it is very cheap. So that's one of the reasons why projects tend to want to build on Solana. It's cheap and it's fast. And if you have this high volume applications such as, a Web3 game, which needs to do a lot of interactions with a blockchain, this is a good choice. And a lot of the meme coin stuff is also built on Solana. So where do you get crypto? Well, you really have 2 choices. Either you go to a centralized exchange or you download a Web3 wallet. And there's kind of pros and cons between these choices. When you're starting off, you can just do it on a centralized exchange because it's so easy. But if you've been in it for a while, if you start accumulating more crypto, I do suggest you download a Web3 wallet. There's a little bit more to learn over there. I have a tutorial on that, of course, so you can check it out. But if you're starting off, I would suggest just do it on Kraken or Coinbase. Just make sure so you're actually going to the correct website. We use kraken.com. There's also a link below that you can use, and it will, of course, help out the podcast if you use that one. All right, so you logged in, you've signed up, you've added your payment method, and now it's time to buy. So just locate the big blue buy button, select the crypto you want to buy. In this case, let's say it's Bitcoin. Make sure it's BTC and nothing else. And then you also need to select the order type. Either you buy a big chunk now, or you can also do a reoccurring buy order. And you can select, to buy weekly or monthly, meaning it's going to keep buying for you no matter the price. And this is a really good strategy if you want to, keep buying it long term. This outperforms traders a lot of the time. So this is really good because it's going to buy on a day when Bitcoin's very low. Of course, it's going to buy when it's high as well. But if you're buying one big chunk at the time, it can be a little bit more stressful when the price goes down. So, you do you, whatever you think it's best for you, if you can handle the stress or not. But anyway, if you want a more detailed tutorial on how to use Kraken, I've made one. You can find it in the link below. All right, so just a little bit more on centralized exchanges. They're very convenient, like you just saw, and it's really easy to buy and sell. You can also connect your card and also do a bank transfer. And when you want to sell your crypto and take some profits, you do so through a centralized exchange. So probably at some point, you're going to need to make an account anyway. And Kraken and Coinbase are highly reputable sources to get your crypto. They follow all the regulations and are compliant. All right, so you've been in crypto for a little bit, a minute or two, you have some crypto. It's time to download a Web3 wallet because that's where you can actually interact with some of these dApps and you're actually the sole owner of the crypto, of the NFT. What you need to know is that you need to write down something called a seed phrase. So a seed phrase is either 12 or 24 words, and you need to write it down in a diary, in a notebook, and then put that in a safe. Do not just screenshot it. Don't write it down just on your computer because if something happens, that's it. You won't have access to it. So the beauty of the Web3 wallet is that this backup phrase, if you lose your computer, if something happens, you can just download another Web3 wallet and type in the seed phrase and you have access to your funds. So that is like where the true value comes in. So no matter what happens, you can still access your funds as long as you have this seed phrase. So yeah. If you need a tutorial on how to use a Web3 wallet, of course, I got you covered. It's in the link below. Check out how to use Phantom Wallet. All right, before we sign off today, I just want to do a quick recap on why blockchains are so important. So of course, you have the decentralization, you have the security, it's protected by cryptography, it's immutable. Once you make a transaction, you can't unmake it. But that also means that you can see the trail of money. So it's very transparent. You can see everyone's transaction. It's also censorship resistant. You can't block a transaction. And it brings that new innovation with digital ownership and digital scarcity. It's also programmable. So you have that programmable money. And it's interoperable. So a lot of these apps can actually talk to each other. And yeah, these are some big words. And now you know them. So as you can see, this is no small innovation. So I'm so happy you're here and you're interested because this is not going away anytime soon. As our lives are becoming increasingly online, we're becoming more and more digitized. We need to keep our self-sovereignty somehow, and blockchains is the way to do that. So if you want more updates, follow me on social, follow the podcast, and thanks for watching. I'll see you in the next video.